This week has been one of the most brutal in the cryptocurrency industry's history. We saw the not-so-gradual collapse of Sam Bankman-Fried's entire cryptocurrency empire in less than 48 hours. With a figure of $6 billion in net withdrawals in 3 days, the former billionaire founder's fortune dropped from $15.6 billion on Monday to $990 million on Tuesday. SBF, as he is commonly known, tweeted on Monday that a competitor was attempting to go after FTX with false rumors. He assured everyone that the exchange and its assets were in good working order. However, less than 24 hours later, he announced that Binance, the competitor who was allegedly spreading false rumors, had been approached to buy FTX and clean up the mess. And what a mess it is, as the native token of FTX lost more than 80% of its value on Tuesday, plummeting from $22 on Monday to below $5 and wiping out over $2 billion in a single day, similar to what happened with Terra Luna in May. The carnage quickly spread to the rest of the cryptocurrency market. Bitcoin, the world's most valuable cryptocurrency by market capitalization, has hit a new bear market low of $16,147. Fears that SBF would sell the large quantities of Solana and Solana ecosystem tokens held by his trading firm Alameda Research prompted investors to dump the Layer 1 token. Solana is no longer a top 10 token by market cap as of press time. After Polygon and Polkadot flipped on Tuesday, it recovered briefly early on Wednesday after gaining over 13% and flipping Polkadot to reclaim 11th place on the list. That, however, did not last long. According to reports, more than 80 million shares of Solana, worth approximately $320 million, will be listed later on Wednesday. Another dump of that magnitude could easily increase the pressure on the token and push it further down the list of top cryptocurrencies. Furthermore, the FTX situation is far from resolved, and several key industry figures have warned that there may be further consequences. In this video, we'll look at the situation from the ground up, starting with the balance sheet that sparked this whole bloodbath. Please watch the video all the way through, like it, and subscribe to the channel. Also, please leave your thoughts and observations in the section below. Thanks and enjoy the video. CoinDesk published an article about the aluminum leaf balance sheet last week. As of June 30, the trading firm's assets totaled $14.6 billion, according to the balance sheet. However, the majority of these assets were FTX's FTX token. According to the article, the key component of the other half of SBF's cryptocurrency empire was $3.66 billion in unlocked FTT. Among its $8 billion in liabilities was a $2.16 billion pile of FTT collateral, $292 million in locked FTT, and more FTT tokens. Loans totaling $7.4 billion dominate. The implication is that the trading giant was backed by a token created by a sister company, rather than a fiat currency or another cryptocurrency. The unusual closeness between these two separate entities is reminiscent of what happened earlier this year between Luna and USDC. Investors also link the unexpected resignations that occurred earlier in the year. On August 24, former Alameda co-CEO Sam Trabucco announced his resignation via Twitter. Brett Harrison, the president of FTX, also announced his resignation less than a month later. Soon after, it was revealed that SBF and FTX were being investigated by the Texas securities regulator. His buy and bailout spree during the Terra Luna contagion had to have piqued the interest of U.S. regulators. Furthermore, SBF was deeply involved in the American political scene. By October 31, the 30-year-old had donated nearly $50 million in the midterm elections, according to Unusual Whales. Put all of this together, and it didn't take long for rumors to spread that the crypto king and his empire would be wreaking havoc over the weekend. Do9 was a technical analyst who predicted the terrorist crash. FTX is insolvent, and we got proof. FTX Exchange and Alameda Research hold $8 billion in FTT value, which is illiquid against a real market cap of $3 billion. That is $5 billion of magic money they report on their balance sheet. Any sell pressure will crash that market cap fast. That is exactly what happened when Binance transferred the rest of their FTX investment. At the time, the 23 million FTT was worth $583 million. Binance's CEO later confirmed the transfer and issued a Twitter thread explaining the situation. Last year, Binance received roughly $2.1 billion equivalent in cash USD and FTT due to recent revelations that have come to light. We have decided to liquidate any remaining FTT on our books. We will try to do so in a way that minimizes market impact due to market conditions and limited liquidity. We expect this will take a few months to complete. Binance always encourages collaboration between industry players regarding any speculation as to whether this is a move against a competitor is not. Our industry is in its nascent year, and every time a project publicly fails, it hurts every user at every platform. In a follow-up tweet, Caesar made it clear that we were about to have another terrorist-style crash, while also firing some shots at SBF. The tweet reads, "Liquidating our FTT is just post-exit risk management learning from Luna. We gave support before, but we won't pretend to make love after divorce. We are not against anyone, but we won't support people who lobby against other industry players behind their backs." In a now-deleted tweet, Alameda Chief Executive Officer Carolyn Ellison offered to buy all of Binance FTT at $22 per token. SBF also stated that the exchange and its assets were fine and had enough to cover all clients' holdings. His tweets have also been deleted. CS finally announced what everyone was expecting on Tuesday. When tweeted this afternoon, FTX asked for our help. There's a significant liquidity crunch to protect users beside a non-binding LOI, intending to fully acquire FTX.com and help cover the liquidity crunch. We will be conducting full due diligence in the coming days. There's a lot to cover, and it will take some time. This is a highly dynamic situation, and we are assessing the situation in real time. Binance had the discretion to pull out from the deal. Anytime we expect FTT to be highly volatile in the coming days as things develop. A part of this thread reads, "Our teams are working on clearing out the withdrawal backlog as it is. This will clear out liquidity crunches. All assets will be covered. This is one of the main reasons we asked Binance to come in. It may take a bit to settle, etc. We apologize for that. A huge thank you, Mrs. Binance, and all of our supporters. This is a user-centric development that benefits the entire industry. Steve has done and will continue to do an incredible job of building out the global crypto ecosystem and creating a freer economic world. The crypto market has been extremely volatile, as expected, as a result of the near collapse of one of the world's largest crypto exchanges. Bitcoin, the world's most valuable cryptocurrency by market capitalization, has reached a new bear market low of $16,147. Ether has dropped 17% in the last 24 hours and is now trading at $1,200. All of the top cryptocurrencies are still suffering losses, but Solana is suffering the most. According to CoinMarketCap data, the overall crypto market cap is also down to $800.5 billion. Despite the intense bloodbath, trading volumes on the top 10 cryptocurrency exchanges have skyrocketed. The top 5 exchanges recorded more than $60 billion in trading volume on Tuesday as investors rushed to avoid the crash. On Tuesday alone, top exchanges increased by 126% to 305%. Coinbase and Kraken both reported connectivity issues as a result of the chaos. 6 cryptocurrency exchanges have also announced plans to publicly publish their fund reserves in the next 30 days to alleviate concerns about their liquidity base and reserves. To increase transparency, Binance, Gate.io, KuCoin, Poloniex, Biget, and OKEx are expected to publish their Merkle Tree Reserve certificates. Several industry leaders have weighed in on the situation and its implications for the rest of the cryptocurrency markets. Binance's CEO tweeted 2 important lessons on Tuesday. Never use a token you created as collateral. Don't borrow if you run a crypto business. Don't use capital efficiently. Have a large reserve. Binance has never used BNB for collateral, and we have never taken on debt. Real Vision CEO Raul Paul tweeted, "The issue is here, not the FTX situation but the Alameda unwind, and there is an even larger liquidity cascade to come. We just cannot tell. Be very careful. Most hedge funds are still sitting on a lot of cash, but it's the opaque trading shops where issues can still lie." Famous Bitcoin analyst Plan B tweeted the following, "Second capitulation event, first Luna, now FTX. Just like the 2015 double bottom, first Bitstamp hack, then fork. But everyone is wondering what will happen next. Will Binance be able to complete the transaction and save the day? Can the exchange raise enough bailout funds without being drained like SBF and FTX? But most importantly, what will happen to other exchanges, trading firms, and other cryptocurrency companies with significant exposure to FTX and Alameda?" Please share your thoughts on the near collapse and its aftermath in the comments section below. Subscribe and hit the like button as well. Make sure to enable post notifications to see more videos about the cryptocurrency and stock markets. Thanks for watching.